Welcome back, everyone. Ahead of Goog and, of course, Tesla's earnings, where is this market going? Where are those individual issues going? How's the market set up? That's what we're going to discuss in this video. Let's get right into it. Well, welcome, everyone. I hope you had a great trading day on the day. And where's the market? It is in a long-term uptrend channel, consolidating at the hard right edge after a 2-month run-up. We've seen the market move into a wilder range, supply in the low 7600s and then higher lows. Let's zoom into the hard right edge of this chart. What do we see the primary market set up to do? Well, it's opening the door above this 75.55 line, something that we had forecasted we are likely going to engage with on Monday, on Tuesday, and of course on Wednesday. We're expecting it to punch through and potentially push us up towards all-time highs. That really does depend on whether the NASDAQ wants to continue participating. It has. It dipped down into the center of the weekly pivot levels for this week and reversed right back up. We got some good long side trading done in the active trade room and on WealthCharts today. I'll share that with you in just a moment. And of course, that reversal is encouraging to support further upside towards a concrete ceiling in between the 29,650 to 850-ish area. This is an area where my expectation is price likely engages with it as the NASDAQ pulls up into this area on what I'm expecting to be a positive market response to Goog and Tesla's earnings. Well, as that plays out, it's likely going to take the S&P E-minis well through the 75.55 area where we opened the door earlier today and did get up into a high of 75.63 and a half a point. So the door is open. We now need to see if the earnings plays gives the market a reason good enough to walk through that door and carry on higher into the lower 7600s or a little higher than that. Now, if things start to go awry in the after hours, danger below 75.13. Danger below 75.13 and extreme alert below 74.73. That would open the door for a move back down to lows that we saw at the back end of June and on June 9th, 10th, 11th, or potentially lower. I doubt that the whole thing would come unglued all at once, but we have to keep our minds focused on the risk management side through this event of mega cap FANG stock earnings. And it's only 2 plays this week. Well, we do have Intel tomorrow. And of course, as we move through them, the big danger lines, keep those in mind, 75.13, 74.73. What are the danger lines on the NASDAQ? Well, coming down below effectively 28,800 really would seal the deal for downside risk that unravels this entire pattern that began at the beginning of May, if you will. We came back and really established it as a floor, that launch bar right there on the 6th of May. We established it as a floor June 9th, 10th, 11th, and we came back to retest it last Friday. The expectation was we're going to bounce up from the bottom of this 2 standard deviation channel, get through the center, and try to make a move up towards the top of the channel, and that's probably where we're going to end up stalling out. Now, I did some long side trading today using my multi-time frame dashboard with the Triple S indicator, the Champion Trend Pack toolkit, but I traded small and MNQs rather than NQs earlier today, and still did well on the day, up just a little over $430, as you can see, continuing to add to my overall tally, looking to perhaps trade in the after hours or right into the end of the day as the market tries to position for FANG stock earnings. Are we in a great signal setup? Not really. We're in a sell signal state on the daily chart. 4-hour chart still in a sell signal state. It's the hourly chart and under that we're relying on into the end of the day that can support the market moving up. And of course, we have to consider the position of each of the 2 major earnings plays as well. Let's go do that before we bring this video to a close. Tesla, on a month-to-date volume-weighted average price code, finds itself a smidge below a danger line, which would be around $376. Above $376 and a rise through $387, that really does open the door for us to fully mean revert to about the $400 area or higher. Could see it as high as $410. And now, if we sustain below $375, and we breach that 1.5 standard deviation line below VWAP, downside risk becomes plentiful and we can find ourselves in the 350 area or lower. Goog, or Alphabet, if we see it come back up above roughly $348 to $349 through the earnings release and conference call, we're likely going to be mean reverting. The mean reversion confirmation really comes in at above 353. And there's a lot more spring in the step for Alphabet, as you can see, wider and wilder ranges. So getting up and above that 353 area could really springboard us up well above VWAP. If we come down below the 1.5 standard deviation below VWAP line around 343, well, the downside risk is likely going to grow exponentially, and we could find ourselves in the 330s or even in the 320s. So watch your back in the case of that downside risk. I hope that this video has been helpful for you to give you some context for the major earnings plays that are coming out after the bell, and of course, the events on the day leading into today, where that market structure is. Thank you for watching. We'll see you on the flip side. Have an incredible rest of your day.